Today, everybody, I have something a little special for you. Today, I have my wife's account adding to my TFSA. So we're going to go into that first, and then we're just going to take a look. I told you in the past that I will be switching up a few things in this account, and once a month, I will be showing my wife's account because it is now accompanied to my account. It just makes it easier to track. Everything's just going to be a little more streamlined, and it's going to be great. So I have a picture of it, actually. So in her account, we have $7,900 added to the account, and it is just into Xeqt. Our total return on that so far has been 2.22%. That is fantastic. Her account will just be Xeqt, and it'll be lump sum invested. So anytime we have money, it'll just go in and just buy Xeqt. And yeah, that's just my wife's account. It's going to offset mine. I've been looking towards adding more money to Xeqt just to, take a bit of the burden off of my side because I am single stock picking. I am taking a lot higher risk with a less likelihood of overperformance. So Xeqt is my hedge against that, and I look forward to seeing that account grow. It is mostly going to be due to our savings rate, and because my wife wasn't born in Canada, she actually has a different rate that she can add to her TFSA. It ended up maxing out at $48,000. So she can only put in $48,000 into that account, and we can add another $8,000 to her first home savings account, which we will likely do probably next year. We'll be starting hers because this year we want to max out her TFSA. I think that we have a really, really solid chance at maxing out that TFSA this year, and then being able to load up both our first home savings accounts next year and our TFSAs, all that maxed out next year. Pretty easy. So let's carry on with my account. My TFSA is sitting at 92,000. If we go to the daily, it is up 0.1%. I do believe that's a lie because I did end the day off with $93,384. So that's probably about 1% on the weekly. I am sitting at 0.5%. Again, I think that it would be 1.5%. No, more like 1%. On the 1 month, $80. It's been quite a volatile month. On the 3 months, as we can see, up and down, up and down, up and down, I am up 3.46%. And on the 1 year, I am up 22.22%. I am falling a little behind the S&P. I am still outperforming Xeqt by a fairly wide margin. So let's take a look at that. All time, I am up 23.5%. So far, my gains are starting to get away from just the single year. I'd love to see 1 year being plus 8 to 10%, but then my all-time being 400%, which we're working on. It'll be a slow process. So scrolling down, we're going to take a look. I've already reshuffled these. I'm sorry, I'm always a little underprepared when it comes to this. NEWT is still my worst performing stock. That is just how it goes. NEWT is something I should be looking back into. I'm not too sure how they're doing. I seen that they were buying back shares. I seen that there was some news coming out, but I want to see that debt level come down, and I do think they're at risk of probably slashing dividends again. I think they were diluting shareholders to pay dividends for a little while, which is concerning to me. Algonquin Power, down 44.4%. Again, bad. Not great. Algonquin Power, I should be looking at. Is it time to buy when things are this low in my portfolio? Sometimes that is the way to go. Nexus REITs not really catching a bid. Their funds from operation, their payout ratio is a little more than they can handle. We'll see how they perform in the future. I haven't been putting money into them. Maybe that's a turnaround play. Maybe these three are turnaround plays that I should be looking at. But only time will tell, and I don't know if I'm willing to take that risk. Even though I'm just going to be reinvesting my dividends, I feel like I could hold on to them and do a little better elsewhere. Alibaba caught a bid this week, up back to $81, so I'm up like $6. I'm down 24%. Alibaba I've been holding for quite a long time, and it is still underperforming. Smart Center REITs down 22%. This one also, I believe, is not the lowest it's been, but it is almost the lowest I've had it. So, damn. Empire Co. down 13%. Their grocery stores, if I was likely going to put money down, it would be, probably here. I do believe that, food sales is something that is getting hit because of high inflation, but that's something that doesn't last forever. So even if it lasts an extended period of time, I mean, if it lasted forever, then that would be, we would have bigger issues than the stock price. So Empire Co., I'm looking at you. Intel, down 8%. I used to be up 40% on this position. This is over a 50% swing for me. That is unfortunate, but I've been so much worse off in this position. I'm not too worried. Bank of Nova Scotia down 2.8%, almost 3%. I thought this was going to be way worse. See, on Friday, TD posted earnings. They also got, they didn't post earnings. They got caught money laundering for some fentanyl sale. I didn't read too much, just headline reading. I thought that Scotiabank would have been hit off the back of this, but they weren't. So, strange. Canadian Tire Corp. My last stock in the negatives. This is the stock that I bought most recently. So, Canadian Tire, welcome to the portfolio. You're sitting flat. Good for you. Cash. I still have $9,000 of the cash ETF in this portfolio. I'm not adding to it. I'm just getting paid from it. So I'm not worried about what's going on there, but I should be looking to use this $9,000. It is 10% of my portfolio, and I've been told 5% to sit on cash is good, but I'm still hesitant. Dream Industrial, 1% up. We're getting into the positives here, guys. I'm drinking Vietnamese coffee. It's so good. Got a bunch of brands of coffee from Vietnam. Oh. Dream Industrial. I haven't been putting money into. I should probably look back into reinvesting the dividends and just slowly plucking away at buying and slowly building that snowball off the back of Dream Industrial. But again, not doing it so quickly. Dollar General Corp, 8% up. I think it was flat last week. Anyways, Dollar General, another slow mover, just like MO. Slow movers, I'm just sitting on them. MO at 8% positive. I think I bought it with like a 9% dividend. So if, even if it held that value absolutely flat for the year, I would still make like 16% on Altry Group this year. So damn, good job, Altry Group. It's going to be a slow mover for sure. They do very minimal buybacks, low percentage buybacks, low percentage dividend growth. It's just something that I want to have and just sit on for so long. VIG, it's an ETF. I could sell it. I just and put that money into Xeqt. I don't know why I don't. Maybe I'll take a look at that. I don't sell things very often, so yeah. Home Depot, up 11%. I was actually waiting for this to be basically flat. If this hit flat, I would likely be buying. I'd like to put $3,000 to $4,000 into Home Depot. I do believe that they have just such a strong business. I just love the store. It's something that I use so often. It hits home for me. I just think it's very well run. I enjoy going there. It's literally like going to Toys R Us for adults. So for men. Home Depot. Moving on, Xeqt up 14 and 15%. I have 609 shares. I'm not going to be adding to this position in this account because I'm going to be adding to this position in all my other accounts. So this Xeqt position is going to stay that size, but I'm not going to be getting rid of it. So there you go. Royal Bank up 20%. This is probably the best the best Canadian bank stock that I've seen. It's just the performance, other than maybe Equitable Bank, just great performance. BlackRock up 22.22%. Another strong stock that I bought. They're doing so well. Brookfield Corp, I hear word that Berkshire Hathaway might be looking into buying a Canadian equity, and some people are saying it might be Brookfield. I don't know how true that is. My information is pretty lackluster these days, so I'm not going to speculate on it and put more money into Brookfield. But I am happy with what I bought and where I bought it. So just a solid position. Apple, another one of my favorite positions, up almost 30%. They had a kind of a bad month last month, but they just released a huge share buyback, even though like their growth is absolutely falling apart. That's kind of why I bought it. It's a mature company. I strictly bought this on buybacks because they can increase dividend without, increasing the amount of money they have to put out. They're not diluting people. They're just sitting there. They're buying back shares, and they're just running a solid business and paying out their shareholders. That's why it's here. I'm sure that's why it's there for most people who bought it. Walmart up 35%. Actually, Walmart's killing it. 35% Walmart. Good job. It's a small position, so I'm not gonna worry about it too much. Alphabet, Google also. Apps they ripped last week. They released earnings. They went up like 10%. They're still doing so well. Google was the underperformer when it came to the Magnificent Seven. I guess the Fabulous Five now, or whatever you call it. Alphabet doing great, doing good. Manulife Financial is something that me and my coworker at work we were talking about. He had like an extra couple dollars in his account, so he bought a Manulife share because his whole family uses it. That's fun. I mean, it's so cool to buy something that from a company you know and use. It's just so interesting. That's what makes stocks so fun, is because there's a company behind it that you can talk about. And Manulife to me this week has just been hitting it home. Not like, obviously they've done very well over the past little bit. I'm up 44%. God damn. But yeah. Manulife. I wish I bought more. Could say that about everything I'm up 50% on. Berkshire Hathaway, 45%. They're doing very well. I keep telling myself I'm going to buy it when it's this price. It keeps not reaching that price. So I guess I'm just going to wait until, the price to book ratio reaches a buy area. And even if I average up, it'll still be something that I would have done anyway. So that's the goal for Berkshire Hathaway. I should take a look at that. Microsoft, terrifyingly small position, $800. I'm up 54%. Good job, Microsoft. Caterpillar is one of my few regrets in life. I was down super, like a lot on this stock, and I should have been paying attention. I absolutely would have. I can't remember. I think I was starting my new job, and there's just so much going on. I wasn't paying attention, and well, I lost out on something that I otherwise wouldn't have, and that's the price I pay for having such a big portfolio, such a plentiful portfolio, if you will. Dollarama up 117%. That's not the most I've seen it, but that is quite a significant amount. Damn, Dollarama. God damn. Look at 4 shares, $400 now. Jesus. Remember when it was $50 a share. Meta's also 140% positive. Dollarama is slowly catching up. Imagine that. But I have held Dollarama for quite a lot longer than I have held Meta, so there is also that. I have $145 available to trade. That is just because of the dividends that I got this month, and they've been sort of, condensing. I'm getting a lot more dividends per month, so I should be finding a ways to use the dividends that I'm getting to buy maybe some bigger stocks. If I buy one share of Berkshire Hathaway off the back of my dividends every couple months, I think that would be super amazing. Anyways, thanks for watching. I'll see you guys next. Actually, wait. No, we can't do that yet. We got to go to my first home savings account, which is fallen. It is just in cash. So with cash, so good. I'm waiting. I'm waiting on a crash, right? Everyone is. So maybe I should be adding half of that to Xeqt just right away, lump summing that. I think I will look into that for next week and just sort of throw it in. At least then I'm not sitting on all cash. And I do believe all cash is the base of underperformance, because if the expected return from cash goes up, that means that the expected return from stocks goes up past that. So let's do it. Anyways, I'll see you guys next time. Bye now. How do I?